What is up, everybody? Welcome back to the Sherpa Live channel, or the Crypto Sherpa channel, where I read you those crypto news articles so you don't have to. So yes, welcome back. What a day. Oh my gosh, it is nonstop, and it's not ending until tomorrow night, maybe Friday night. Let's just say I am really looking forward to the weekend. But jam-packed day today. We had two classes here at the Crypto Club. Ben did his show. I'm doing my show now. He's going to do another show later out on stage out there. And I'm still bringing you those daily news articles. So yeah, but what's going on in the crypto world? Is XRP's lawsuit finally over? What? I don't know. I saw this. I even saw Randy Hipper tweet it, like with the actual legal post about it. But no, this will be our first article of the day. And breaking, Ripple has been fined $125 million in the SEC case, but XRP exchange shells are still deemed legal. So yeah, so it looks like they just got a nice little hefty fine there. And I don't know, is it? Is it over? Let's find out. So here we go. Ripple was fined just $125 million for institutional sales, and crypto exchange transactions were deemed legal. So, okay. Judge Torres ended a nearly 4-year legal battle with the SEC by ordering Ripple to pay $125 million civil penalty and halt further violations of the security laws. Now, the SEC had initially requested a $2 billion penalty from Ripple. So $125 million is peanuts compared to that. But I gotta read this way. In addition to the financial penalty, Judge Torres issued an injunction prohibiting Ripple from violating federal security laws in the future. Although there was no judgment that Ripple violated any laws out there following the SEC's lawsuit, he emphasized the risk of the company crossing the line in the future, and it is significant that they do so. Now, rather that the court finds that Ripple's willingness to push limits of the order indicates that likelihood that it will eventually, if has not already crossed the line. Judge Torres said, consequently, the court finds that the likelihood of future violations is not as reasonably possible to warrant injunctions relief. Now, he decided it was possibly the SEC that is expected to appeal the July 2023 decision, as the penalty was imposed, and this comes after the SEC was denied a temporary appeal by the same judge last year. Now, additionally, the SEC and Ripple reached a settlement regarding the accusations against CEO Brad Garlinghouse and other executives after the appeal was rejected. So yeah, is it over? So yeah, they just got a $125 million fine, but woo, way to go, XRP. Sherpa's face, Z-Pods. Oh my gosh, where have you been, brother? It's been so long since I've seen you. Oh man, miss you guys up there. Not my favorite crypto, but it's our girl Amanda's favorite crypto. She picked up some, like this is not financial advice, but like she was able to get like a $10,000 credit line, and she just wants to get crypto with that. She couldn't buy crypto directly, so she actually paid my rent, and I gave her cash, or I Venmoed her the cash that she just paid me, and she bought like XRP like when it was at 48 cents, 49. And where does XRP at right now? Let's take a look, because I know there was a jump. So let's go over to the market cap. Let's see. XRP is currently at 58 cents. So we've jumped how much? 15% in the last 24 hours? Yeah, so really, like, it's been like a 26. Look at that jump right here. This is the one day. I'm sure we can go zoom in at the hour. But no, I guess after this news, bam, people started buying it up. So yeah, how far is XRP going to go? I don't know. We're just going to have to wait and find out. But yeah, it's over. It's done. Cool. They're just going to pay that fine. Will they have any other issues? Yeah, we'll find out down the road. But yeah, so I guess that's probably the biggest news for you guys today. But let's see what else is going on. What else is happening? This next one's coming from Cointelegraph, and real-world tokenizations can drive home ownership, and Quarter Home says Quarter Home CEO. So yeah, currently the 30-year fixed mortgage rates in the United States are close to 7% as younger individuals struggle to purchase property. And that's no joke. Like my generation and beneath, like really don't really see the opportunity or really the reality of actually buying home. Some people are just living paycheck to paycheck, hoping like something happens, collapses, and fixes itself. But that's not the right mindset to be. Just start investing in XRP, Bitcoin, just any asset you can that will appreciate in value later on. And then maybe you can get a house. But if you're just living to paycheck, it's going to be a struggle just to survive in the future. So just saying. But yeah, let's learn a little bit more about these digital assets coming to fruition. So home ownership, once an attainable dream in much of the developed world, is quickly becoming a distant fantasy for younger generations, as the price of the residential real estate soars and interest rates are driven to relative highs in an effort to quell inflation. Now, Cointelegraph sat down with Shannon Deesh, CEO of Quarter Homes, a company offering tokenized alternatives to debt-based mortgage financing. Now, to get the lowdown on how real-world assets tokenization can foster home ownership, well, the CEO explained that tokenizing residential real estate introduces a new equity-based model for home financing that brings together real estate investors and aspiring homeowners as equity partners in the transactions. Now, a stark contrast from the current creditor-debitor relationship characteristic of home mortgages. Now, here's a little diagram of that. The higher mortgage interest rate payments pushed 320,000 mortgages into poverty back in December of 2023. So, nasty chart. So yeah, this chart showcases the destructive effects of debt-based mortgages. Now, this works by assigning fractionalized equity rights via tokens to both the investors and the homeowner, allowing both parties to share in the appreciation of the underlying asset and realize their equity gains by simply just selling their tokens. Now, in this model, investors can capitalize on both the appreciation of the property and monthly cash flows from the homeowners. Now, Deesh then remarked on the lower barrier to entry tokenized real estate provides the potential for homeowners. She goes, retail investors can buy investment properties very easily. It's expensive, but they have to save up for the down payment, all those things. And so it's really just opening that opportunity up to folks that don't currently have access to that type of investment. So that's what this really is going to allow them to do. But moreover, tokenization provides an alternative to the current equity tapping solutions, such as home equity lines of credit and other private equity refinancing, which are often out of reach for many individuals or are predatory, according to Deesh. Now, investor benefits too. How does this all work? Let's find out. On the investor side, tokenized residential real estate give investors an alternative avenue for property investments that removes the headaches of rental agreements and property management. The Quarter Home CEO told Cointelegraph, additionally, by connecting investors directly with aspiring homeowners, costly intermediaries such as banks and Wall Streets are removed from the transaction, bringing significant savings to both the investors and the homeowner. Now, blockchain is changing the real estate game, and we said it all the time. We don't need those middlemen over there. It should just be peer-to-peer, but if you can get those deeds on the blockchain, boom. But yeah, in 2023, Ralph Kubli of the Casper Association pitched a similar idea of tokenized mortgages to provide much needed transparency for the home mortgage industry to avoid another 2008-style financial crisis. Now, here's a chart showing the U.S. added fewer gross housing until units than in 2018 and then prior to 2008. So, low charts there. But the Home Construction Collective is also leveraging real-world assets and tokenization to use blockchain-based crowdfunding mechanisms to build residential homes, which the organization claims are deliberately undersupplied to the market, pricing first-out home buyers. Now, on the commercial real estate side, Hilton Hotels and Resorts recently issued tokenized debt to build a hotel in El Salvador. Investors must invest a minimum of $1,000 into the project to receive tokens that are exchangeable on the Bitcoin Layer 2 liquidity network. So how do they do that? Did they do that how we did that with our tokens here for the crypto clubs? Do they use runes? I don't think they would use ordinals, because I came across that when I was building our token that you can't send them out individually. So who knows? Maybe they made a rune style of it to be on the Bitcoin Layer 2. And is that a Layer 2? I could have swore there. No, yeah, I guess it really is. But yeah, no, digital real world assets on the blockchain is a real thing, and like home ownership with homes, everything was definitely down the road. And actually, it's kind of here now. It's happening, but that's what we said back in the day. But no, it's actually pretty cool that it has been talked about and been like mulled over, and now it's here. So pretty cool. Yeah, so that's that news article for you. Hope you enjoyed this one. Now let's move on to another article. What else is happening in this space? Oh yeah, have you guys ever been curious on how much Michael Saylor actually holds? Not MicroStrategy, his company, but his how much he actually holds in his personal wallet. Well, that's what this article is going to go over. Let me take a sip of my very sugary Starbucks drink. Yeah, look at this giant thing. It's a Trenta-sized iced coffee. Has like 5 pumps vanilla, white mocha, 7 pumps vanilla. It's, just a sugar rush, which I'll get a crash later. But yes, let's go on to Michael Saylor's holdings. So yes, billionaire Michael Saylor reveals his personal holdings of over $1 billion in Bitcoin. Gee, yep, he's definitely a seven-digiter, hundreds, thousands, millions. But no, he's like a four-digiter. But yeah, Michael Saylor, the executive chairman and co-founder of MicroStrategy, has revealed that he personally owns more than $1 billion in Bitcoin. In an interview with Bloomberg, Saylor described Bitcoin as Cyber Manhattan, emphasizing the investing in prime assets is always a good decision. He did not reveal the exact amount of his Bitcoin stash. However, in a 2020 post on X, he revealed that he holds over 17,732 Bitcoin, which he initially purchased for approximately 175 million. So yeah, this post was on October 28, 2020. I guess I didn't go through this article beforehand, but so this is an old one. But yeah, he bought like 17,000 back then at around like 9,882 each. So yeah, he dollar cost average lows. And he did say that he informed MicroStrategy of these holdings before the company decided to go in and buy Bitcoin for itself. Now, Saylor highlighted the Bitcoin superiority of it all. During an interview, Saylor highlighted Bitcoin's superiority over physical and financial capital, praising its potential to generate substantial wealth for individuals and corporations and nations alike. He also commented on the recent market crash that impacted Bitcoin, stating that such volatility is inherent to Bitcoin's nature. The volatility of Bitcoin creates tens of billions of dollars of credit and liquidity at all times, everywhere, to everyone and everything in the world. Now, in short term, he says. Now, moreover, he noted that the long-term volatility drives superior asset performance and durability. MicroStrategy, the company he leads, has also made a substantial investment in Bitcoin. As of now, MicroStrategy holds around 226,500 Bitcoin, worth approximately $13 billion. Now, this strategic move has not only boosted the company's stock price, but has also positioned it as the largest public holder of Bitcoin. Now, during his address at the recent Bitcoin conference, Saylor forecasted that Bitcoin's market capitalization could soar to $280 trillion by 2024. He argued that Bitcoin, currently accounting for just 0.1% of the global wealth, has the potential to reach 7% in a base scenario, translating to a price of $13 million per Bitcoin. Now, that would be very nice. If you're a whole corner out there, you're going to be very, very happy for that. And you're a partial owner. If you can get 0.01 Bitcoin, you are good. So that's something you should strive for. At least try to get a hold of that, because when Bitcoin's all gobbled up, like by having that 0.01, that's at least 1 million Satoshis. And if you don't know what a Satoshi is, that's the smallest unit of Bitcoin, which is 1/100th of a million of it. So you don't need just to buy one Bitcoin. You can buy the smallest unit if you want. And we got a machine back here called the K1 machine, and you can swap your change and get it. So it's not that hard to acquire. But let's continue on. So he also argued that Bitcoin currently accounts for just 0.1% of the global wealth and has potential to reach 7% on a base scenario. And then in a more optimistic scenario, he envisions Bitcoin capturing up to 22% of the global wealth, with each Bitcoin potentially worth 49 million. So, with 22% of the global wealth, would be at 49 million. Crazy. Saylor's bullish stance on Bitcoin is grounded in his belief that the cryptocurrency offers a more reliable store of value compared to traditional assets. He also highlighted that Bitcoin's value isn't diluted by geopolitical or economic crises, unlike fiat currencies and physical assets. Now, Bitcoin Reserve is a Louisiana Purchase moment. I kind of covered that in yesterday's article, so we really don't need to go through that one. If you want to know more about what he meant by that, watch yesterday's video I covered. But Saylor drew a historical parallel by referencing Thomas Jefferson's purchase of Louisiana Territory for $15 million in 1803, which nearly doubled the size of the United States. He described Bitcoin as a scarce, desirable digital property and argued that trading a small amount of currency or paper for digital assets that billions of people will want to own in 100 years is a great idea. Bitcoin is scarce, it's desirable digital property, it's a great idea to trade a little bit of currency or paper for some place that billions of people are going to want to be in 100 years. So yeah, again, just with that idea, it's just saying that like people don't really they're underestimating like what Bitcoin's true value is going to be in the future. It's like you really can't grasp it. Like back then, that's what the Louisiana Purchase was all about. Like no one thought about that with all the land that was being bought up. It's the same thing with Bitcoin. So yeah, so that's how much Bitcoin Michael Saylor holds. Just it was popped up from like back in the day from 2020, and who knows, he probably has more than the 17,732 now. So. Like that was 4 years ago. We already know his company was bullish on acquiring it. We know he was bullish on acquiring it. So who knows? Maybe he's in the 20,000s now. 30? We'll never know, but we do know he is a billionaire in Bitcoin standards. And actually, this is a good lesson to just never disclose how much Bitcoin you have. Like, that is nobody else's business at all but your own. It's like, don't share. If anybody's trying to ask you, like, well, how much you got, just say you have enough, or you have been dabbling in it for a little bit, but they don't need to know. It's unethical, and also it puts a target on your back, so don't do that. So yeah, Michael Saylor kind of can do it because he's rich. He's a billionaire. He's got so much protection on him. But the common folk out there, we've covered so many articles of people being mugged on the streets for their crypto that they keep in their wallet or whatnot. So just be safe and don't disclose how much crypto you have. But that is that news article for you. Now let's move on. What else is happening? Oh, looks like we have some more Bitcoin. Lots of Bitcoin news today. But it looks like a wallet from the Bitcoin Satoshi era awakened after 11 years and just transferred $14 million. I don't think that really had an effect on the price of Bitcoin, but this usually fears people a little bit. It's like, what are they going to do? They just sell it? What's happening? That's like 11 years old. But yeah, let's go through this article. A Bitcoin wallet that's been dormant since 2010 activated, recently moving around 14 million to 5 separate wallets. After 11 years of dormancy, a Bitcoin wallet belonging to a miner dating back to the Satoshi era in 2010 has come back to life. This entity suddenly became active on August 7th and transferred 250 Bitcoin worth approximately 13.95 million to 5 new wallets. Now, historic Bitcoin wallets from 2010 awaken. According to the latest update by popular on-chain tracker Look On-Chain, the wallet originally earned 250 Bitcoin through mining in May 2010, when Bitcoin was hovering below the $1 mark. Notably, this entity sits on an unrealized profit, at least for now, of over $14 million in 2024. So if he received 250 Bitcoin at the start of the Bitcoin when it was first created, people receive 50 Bitcoin per reward. So that means he must have solved 5 blocks on the Bitcoin blockchain to have earned that 250 Bitcoin. Crazy. And just to think nowadays, if someone solved 5 Bitcoin blocks, they're really only rewarded 3.125 each time. So let's just say now people are only getting 15 Bitcoin. So back then in 2010, if you saw 5 blocks, 250 Bitcoin. You saw 5 blocks now, you just won 15 Bitcoin. So crazy. Now, the latest transfer saw the earnings being distributed across 5 separate wallets with amounts ranging from 10 Bitcoin to 60 Bitcoin each. The unexpected activation of this long dormant address has sparked curiosity and speculation. Seeing dormant wallets come back to life and isn't entirely new. In fact, several from the Satoshi era period between 2009 and 2011, when Bitcoin's pseudonymous creator was involved, have displayed significant activity. Now, recently, a Bitcoin wallet that had been inactive for 14 years woke up from slumber and transferred 50 Bitcoin, which was valued around 3.05 Bitcoin at the time, to the Binance crypto exchange as reported by Crypto Potato. The wallet holder initially received the funds as a mined reward. So again, yeah, they just mined 1 block, and that was the 50 that they got. Now, Bitcoin price struggles right now. Does it? We had that dip because of the Japan Black Swan event really that did take place, which dropped Bitcoin like $14,000 in like a day. But now we're back around like 50,000, 56, almost 57. But yeah, the latest activity comes as Bitcoin struggled to regain ground over the weekend. The crypto asset experienced a significant price crash, dropping below 50,000 for the first time since February of 2024, due to several factors. The decline mirrored huge losses across Europe and Asia and the stock markets, highlighting the broader economic turmoil and general risk of the sentiment among investors. Now, disappointing U.S. employment figures released last week raised concerns about the slowdown in the world's largest economy, triggering a sell-off in risk association assets, and the sudden price drop in digital assets led to hundreds of thousands of traders being wrecked. Did they say wrecked? Yeah. But with total liquidations amount to over $1 billion, Bitcoin has since risen above $57,000 and was up 4% in the last 24 hours. So yeah, like I said, Bitcoin's up, nothing really to worry about there. But yeah, and looks like some Satoshi era wallets are awakening, and yeah, they have the full right to. So yeah, that's some news for you. I would have said pretty cool, but is it pretty cool? But actually, I guess it's pretty cool because then this Bitcoin could be going back into the public, and hopefully the people pick it up and not big-time governments, countries, and whales acquire it. Because in the articles I covered yesterday, whales were buying the dip, while normal people were fearful. But we don't want one person or big company or big creatures to be holding all the Bitcoin. We want the people to have a lot of it too. So Yeah, so hopefully this hits the market. But that is that news for you. What else is going on? And Georgia Vondo, I see your comment over here, like zero point zero 0.01 Bitcoin. Yes, if you have 0.01 Bitcoin, that is 1 million Satoshis out there. And yeah, who knows what's going to happen? Like people are thinking like they're still valuing everything in the US dollar, but what if you valued everything as Satoshis? Seems like people would rather have a single digit number. So let's just say the Satoshi became the new dollar. Just saying hypothetically, not that it's actually going to do that, but if it hypothetically did, that zero point zero 0.01 Bitcoin is technically the new $1 million. So that's why I like to say 0.01. But okay, yeah, let's move on. What else is happening in the news? I'm thinking right now, yes, Morgan Stanley is now officially pitching Bitcoin ETFs to their employees. This article is going to be coming from Cointelegraph, and for now, the advisory platform is only recommending ETFs from BlackRock and Fidelity. So yeah, the big rigs out there. Like, why would you go for the other ones? Like, BlackRock's definitely the best one to go into, but in the long run, you want to just buy Bitcoin. Don't go for these ETFs. Like if you do get one of the China's ETFs, I'm just saying that because at least theirs is Bitcoin for Bitcoin. You buy into it, you can get Bitcoin back. But if you put it into these American ones out there, you're just getting cash back and you're not actually holding on to Bitcoin itself. You're just filling their bags. But yeah, shocker. The banks are going to fill the other guys' bags. But yeah, let's go through this article. Morgan Stanley, the largest wealth manager in the United States, authorized its 15,000 financial advisors to start recommending Bitcoin exchange-traded funds and ETFs to the clients on August 7th. A person familiar with this matter told Cointelegraph that the person who was not authorized to speak publicly on the matter confirmed an earlier CNBC report, which said that the financial advisory planned to start recommending Bitcoin ETFs on August 7th. For now, Morgan Stanley is only recommending two products, BlackRock's iShares Bitcoin Trust and Fidelity's Wise Origin Bitcoin Fund. Now, winning over Morgan Stanley is a milestone for crypto. Among wirehouses, Morgan Stanley is the largest. Its advisory network manages some $3.75 trillion, including $1 trillion in self-directed client accounts. And according to financialplanning.com, let's see, yeah, that's from them. Crypto Invest is now easier ever. Fidelity, so this is what the ad looks like for them, for how they're offering it. Now, BlackRock's IBIT and Fidelity's FBTCs are emerging as blue chips among BTC ETFs. They are seeing adoption not only among wirehouses like Morgan Stanley, but also among independent financial advisors. Roxanne Islam, head of the sector and industry research at Vedify, a fund research, told Cointelegraph that since the launch of these spot crypto ETPs, demand has been strong across all client segments, which is exciting to see the potential this asset class brings amongst retail investors, RIAs, institutional investors, and beyond. Matt Horn, head of digital asset strategist at Fidelity Investments, told Cointelegraph that continued to uptake by leading advisory platforms could spur a surge of inflows from advisors into the spot Bitcoin ETFs. Matthew Siegel, Van Eck's head of digital asset research, told Cointelegraph, until now, the largest financial advisory firms known as wirehouses have been hesitant to embrace spot crypto ETF inflows from financial advisors and were previously limited to independent shops known as registered investment advisors. The RIA community tends to be early on investment adoption curve. Now, they were early adopters of the ETF vehicle, and that adoption continued with the recent spot crypto ETPs, Horn said. So yeah, JP Morgan's, or not JP Morgan, not that guy, but Morgan Stanley is now advising their clients to get some Bitcoin ETFs. So yeah, just you do you guys. I wouldn't do it. I would just buy Bitcoin. But that's that. And we got one more article to cover. And let's see, what is that one? It's another hack. You know me. I love showcasing some hacks. Way you guys are aware of it. And if you're maybe thinking about going into the project and you didn't know about it, this is why I share it. So that way it's like, oh, that just happened. Maybe let me maybe not get into it. But yes, so this next hack was informed to us by Crypto Potato. And Nexera protocol was hacked for 1.5 million. The NXRA token drops over 40% since then. Now, on-chain sleuth ZachXBT linked the attacker to previous compromises on platforms like SpaceCatch, OKX, DEX, and others. Now, Nexera, a DeFi protocol, has been affected by a smart contract security breach that resulted in the theft of the 1.5 million worth of the tokens. Following the incident, the value of the protocol plummeted 40%. So yeah, if 1.5 million was stolen, plummets 43%. This exploit was first reported on August 7th by Cyverse, a blockchain security firm a post via on X and stating that our system has dedicated a suspicious transaction involving your proxy contract. According to the post, an unidentified address managed to take control of Nextera's proxy contract, a subsequently upgraded it to gain access to administrative functions, and using the withdraw admin function, the attacker transferred all available NXR tokens out of the contract. Now, Cyverse added that the stolen NXRA tokens are already being converted to Ethereum, and a portion of the funds have already been bridged to the Binance Smart Chain. Now, hackers frequently exchange their stolen tokens for Ether to obscure the funds of the origin using the cryptocurrency mixers like Tornado Cash and complicating cybersecurity firms from tracing the efforts. So that's what they usually like to do. They like to mix it so it makes it a lot harder to track. Now, the NXRA token felt the impact of the hack almost immediately. Data from CoinGecko shows that NXRA has dropped by 43.2% and is now trading at 0.0343 cents, so 3.5 cents-ish. It also hit a new all-time low of about just under 2 cents on August 7th, and though it has since rebounded 76% from that low, this hack did not help. Now, Nextera's hack tied to previous attacks. According to on-chain data, this is not the first malicious activity attributed to the exploiter, on-chain sleuth ZachXBT. Linked the attacker to a series of previous private keys compromised involving several other platforms, including SpaceCatch, Concentrix Finance, OKXDex, and Serenity Shield and Reach. Now, in response to Nextera's post, ZachXBT noted that the teams continue to fall for the same types of scams nearly a year later. Now, this breach is the latest in a string of high-profile security incidents in the DeFi space. Just a day earlier, the Ronin network has exploited for $9.8 million worth of ETH. And although the suspected white hat hacker returned all the funds within hours, there are some others that have not been returned. Now, furthermore, nearly 3 weeks ago, a hacker stole over $230 million from WazerX, an Indian cryptocurrency exchange, marking the second largest cryptocurrency hack out there. So just be careful out there, guys. When it comes to these hacks, it's like some of them you can't be truly aware of it. Like I think I said, like one way I like to stay safe with it, it's like if there's ever like an update exploit, usually like I will not like do the update right away. I'll give it a week or two and then I'll be like, okay, let's do the update now. And then because usually you probably would have heard in the news that there was a hack that happened like we saw with Atomic Swap. And then other ways to do it, I don't know, were they keeping their coins on this platform? I don't know. Are they draining it? Were they taking the liquidity out from the DEX? Was it a DEX hack? You guys just, this is also just on the research of your token, like how secure are they and whatnot. So just always be sure to do your research on it. But yeah, if you're thinking about getting this token, I don't know. I wouldn't. Once I see a hack happen, I kind of lose hope in it. But that's that hack news for you. But that's the last article I had. And yeah, so I hope you enjoyed all these articles I read through you. Let's take a look at the Fear and Greed Index. Where are we at today in the markets? Let's find out. Let's see, let this load up. Bitcoin's at 55,000. So we had a little dip these last couple minutes. But hey, look, our Fear and Greed Index is moving up. We're in the 30s for the last 2 days, but now people are getting a little bit greedy. They're understanding the markets a little more, so they're being less fearful by probably seeing like, oh, wait, the whales are buying? Oh, why did I sell my Bitcoin? So the market is going a little bit back to the greed territory, and when that happens, we'll see the price spike. But always remember with this, if we are in the greedy territory, market might be due for a correction, but when we're in the fear territory, that's a great buying opportunity. So again, this is just feeding off people's emotions. But yeah, so I hope you guys did enjoy these article read-throughs. I will upload these separately later on today, so I to watch the full video and just click on the news article you want to listen to. And again, all the articles description and links will be in the description box of those. So if you just want to read it yourself, the links are down there. But yeah, so I hope you guys have a fantastic day. Go get some more XRP because who knows how high that's going to spike. And yeah, definitely come by tomorrow if you're in Sarasota. The address is down here. We're having a Bitcoin Ben meetup. Meet Ben himself. It starts at 6 o'clock. It's a free event, so invite all your friends. And yeah, so I hope you guys have a fantastic day. And until next time, the Crypto Sherpa is out.